The market is driven by technical analysis and the flow of money. This flow, whether initiated by quants, momentum traders, or retail meme enthusiasts, have significantly impacts on the stock prices. On Monday and Tuesday, quant funds and momentum traders have played a crucial role in the rally of stocks like AMC and GME, commonly known as meme stocks. It's been documented that quant funds were buying these stocks even before Roaring Kitty's tweets showing their attentiveness to market sentiment. Some hedge funds have also participated in this rally. On Wednesday, the time of filling this video, GameStop was down about 9% for the day, and in after hours trading another 10%. But before we get to day's price action, what was driving these momentum stocks this time around? Quant fund buying and the increasing cost of borrowing. When you combine 4 or 5 times the average short interest with higher borrowing costs, it creates a situation ripe for a meme stock surge. This is exactly what happened AMC, GME, and other meme stocks. Welcome, investors and traders. In this video, we delve into the fascinating world of meme stocks. We'll explore how to trade these volatile stocks, the reason behind their explosive rises, and what the future holds for them. Discover the technical drivers behind these market movements, including the impact of quant funds and momentum traders. We'll also discuss the role of social media sentiment and the influence of Roaring Kitty on stocks like AMC and GME. Whether you're a seasoned trader or new to the game, this video provides valuable insights and strategies to navigate the meme stock phenomenon. It is amazing that the average person can get a fair shake against the hedge funds. Hedge funds have been beating the little investor since the beginning of time. We need to be very careful, but I think we can make money. Disclaimer: the information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. It is important to know that this will be like trying to catch a falling knife if I am wrong. As you know, I have been bullish since January 1st, 2023. We were specifically bullish on the Magnificent Seven last year, and this year we were focusing on artificial intelligence and cryptocurrency. We've also made bold predictions that this year will be an up year and there will be a major bullish event in the stock market. As we speak, while filming this video, we are seeing many of the indexes reach these highs. In fact, on Wednesday, the tech-heavy Nasdaq Composite climbed 1.4%, notching its second record close as the Dow Jones Industrial Average jumped close to 1%, 350 points, creeping closer towards the 40,000. And the S&P 500 rose nearly 1.2%, closing at 5,308.18, above 5,300 for the first time ever. We were damn right in our predictions. When the market sold off 8 to 10%, we told you to buy. We were right. We have not always been long. In 2022, we screamed to you to short the market. So to say we have not built a little trust between us, and I have made some crazy statements that have been right. I'm going to say a few crazy statements today. Of course, disclaimer, but of course, I hope you believe me, like in the year 2022, 2023, and 2024. I've earned some trust from you. The initial thesis is straightforward. A large number of individual investors collectively buy a stock that has significant short interest. In this scenario, major hedge funds have bet that the stock will decline in value. Shorting is a common and healthy part of the stock market, which we engaged in during 2022. However, sometimes these hedge funds excessively short these stocks and engage in activities to push the stock price down, using media or investigations to influence the market. When these shorts pile on, they try to gang up on these companies. However, if enough individual investors muster collective buying power, they can create a short squeeze. Shorting involves selling a stock you do not own, but eventually you must buy it back. When enough people buy the stock short, sellers are forced to cover their positions and buy it back, causing the stock price to rise further. This creates a self-fulfilling prophecy as the stock price continues to climb, driven by the need to cover the short. I admire the the influence of the GameStop, AMC, and other meme stock, which were significantly impacted by a single tweet from Roaring Kitty. Keith Gill, also known as Roaring Kitty or Deep Fucking Value, across various social media platforms like Twitter, YouTube, and Reddit, was the original retail investor who triggered the surge in GME shares during the meme stock frenzy of January 2021. His recent post on Sunday was his first in 3 years. In late 2020 and early 2021, Gill grew a large following by promoting GME stock and sharing his gains, turning about 57,000 into tens of millions of dollars by buying options. His post and analysts resonated with a massive audience, leading to collective buying spree that resulted in a dramatic short squeeze and skyrocketing stock prices. I believe the reason you are watching this video is how to trade GameStop. And let's get right into it. First of all, I would not short GameStop. No matter how high it goes, I would not short into GameStop. The reason why is because it's trading above its moving average with high volume. Even if it has big upswings and downswings, this is not the company right now to short into it. This is the company to look to buy into it. We're going to give you a few ways and right entry points to get into GameStop that has no emotion on the bullish side. I'm going to give you the techniques and why I use them. If you are a fundamentalist, this part of the video is not for you. This is clearly a momentum-driven stock and will be driven with high volatility and not based on the fundamentals. You need to have a plan, a trading plan, a system. And if you are new to investing, this is one to stay on the sidelines and to learn. These rules that I give you can apply to other meme stocks, not just GameStop. But since GameStop is so much in the news today, it's going to be fun to try to earn some money off this stock. Before we get started, again, disclaimer, the information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. I repeat, no matter how high this goes, do not short into it. Why? A few videos ago, we had said that this market is going up higher, and there will be a big surprise event that drives this market up higher. We started a year and a half ago telling you this market was going to go up higher. We came back in January and told you this market was going to go up higher. We came back 4 weeks ago on the dip and told you this market's going up higher. So what are we telling you off the QQQs? Where it is at highs, we're going up higher. So if the overall market's going up higher, that's a good start. Then we break it down into the sector. If you look at the gaming sector and the video game sector, it is clearly on an uptrend. And clearly after the run of GameStop, it looks good. But thus saying that, the video game sector looks positive. I mean, we're not talking AI, NVIDIA positive, but we are in the right sector. Then we break it down. Are we in the right stock? So if QQQs are in a growth phase, if the video game and esports are in a growth phase, and clearly, even though we're having a pretty poor day in GameStop, and yesterday another poor day, GameStop is still technically on an uptrend. It was just overbought. So the question is, if something is overbought, what do? We wait for pullback. Now, this pullback could be extreme. This pullback could be something different because of GameStop and of Roaring Kitty. But let's continue further. If we're just keeping no emotion over here, and we look at this since 2020, and I want you to feel what the investors felt. Basing, complete euphoria. Drops back down, pulls back. Again, complete euphoria. Drops back down, complete euphoria. And then we start the breakdown. And then we have a basing period for over a year. And now recently, we've had a breakout. And if you're not just looking at the name GameStop, you would say this company is a breakout. Now, thus saying that, we would have loved to got into GameStop when it first broke out over here on high volume. But this is something to look at for other meme stocks. When we see a meme stock for the next 3 to 6 months break out above the moving averages on volume and other indicators lining up, this is a potential to buy. The greatest potential to buy GameStop when it broke out above the 19.5, 20 level. This was the real time to buy. But thus saying that, we missed out. Let's say you missed out too. Okay, it went up and then it's pulling back. What's the usual pullback? Well, the usual pullback is going to be to where it initially gapped up. So that's why we're saying a time to enter GameStop is on pullbacks to about 22 to 24.77, around this area over here. And we would love 4 or 5 or 6 days to stay around this level and to break out. So now, pullback, vicious pullback to 22 to 22.47. Right now, we can take our move on GameStop. This is the simplest approach to look at GameStop, taking out all the emotions. Macro, QQQs, looking good. Sector, looking good. Breakout? Yeah, man, this broke out. Sure, would you have loved to got in at 20? Yes, but you didn't. So what's going to happen? We were clearly overbought at 60, 65. It's going to pull back. I believe it will hold these levels over here. And it could be a week, 2 or 3 weeks holding these levels and not breaking. Thus saying that if it breaks and closes the day, let's say over here below the 20 level, that would be my stop loss and take my losses and run to the next one. We call this the breakout point, and this could be used to other meme stocks also. The first opportunity is when a stock initially moves above its basing phase and enters an advancing stage. The second and safer time is when a stock pulls back towards the breakout point after the initial breakout frenzy. Oh, we had a breakout frenzy. The cat was meowing and we're just waiting for a pullback. Now, if you're a fundamentalist, not going to work for you. If you are such a die-hard GameStop, this could not work for you either because you do not have a system. Thus saying that, I think this stock runs. I just think that we're going to sit around for the next few days at a certain level, and then we will break out. The biggest question is when to get out. That's a harder one to answer. And you have to look at the closes. This is the main concern. But with this system, if you make a good percentage, I would take some chips off the table and then reload on pullbacks. Now, thus saying that, these meme stocks will not go forever. Remember in 2022 and even 2023 wasn't great for them so much. But I believe there's an opportunity now. Disclaimer. Another thing I want you to watch for is overbought, oversold indicators when watching GameStop and other meme stocks. Usually on such powerful stocks, your overbought, oversold indicators will not go to zero. It'll just dip down lower and then jump back upwards. Sort of like when people thought we were overbought in the stock market 3-4 days ago. That didn't work out well. And this is the same thing with GameStop. I think a number around 30 for a short-term indicator could possibly work. I don't think we'll be hitting zeros. And same thing if we go to short-term, medium-term, and long-term indicators and exit swing signals for overbought, oversold. You saw the last few times it never reached the zero level. And even though we're high now, we'll pull back a little bit and then jump upwards. I would love to look at the CCI indicator and to see if we can get closer to zero on the CCI indicator and then jump back upwards. This is a very difficult stock to invest, to trade. This is for people who really know what they're doing in the stock market. My opinion is based off no emotion. My opinion is that will come close to the gap, and that will be the time to buy when some of these overbought indicators are more normal, and then I believe GameStop will go up. It will not go up forever. We're in GameStop, not for a long time, for a good time. We're going to be watching other meme stocks and looking for that breakout point. I hope you enjoyed this video. You know the catchphrase. Study it, analyze it, adapt it. Peace.